Welcome to today's deeper dive into what the impacts of today's interest rates are doing to the local real estate market, specifically here in the greater Seattle, Washington area. Let's dive right in. So the first chart we're looking at right here is the national rent. This is since 1984. You can see that rent prices generally don't go down. If you were a landlord, why would you want to make less money next month or next year? There's really no equity for the person renting. In fact, there's some studies that show that homeowners' entire financial net worth is about 40 times higher than those who are renting. So, pretty clear chart here. The second chart we're going to go over is this chart of home appreciation. As you can see, over the last many decades, specifically this last 23 years, so last 2 decades, there's only been 4 years of depreciation. And that was during pretty much the worst economic crisis we've had in the United States, which is the bubble of everything bursting in about 2008. You might wonder, is Seattle gonna burst? Well, right now, there's indications that Bellevue and Seattle, tech is gonna continue growing here at least for the next several years. We still have a lot of people moving here, specifically from California. We have lots of trees here, we have lots of water, and most importantly for a lot of people, we have a lot of great industry that they can be in, whether it's the blue collar sector with lumber, with like Weyerhaeuser, for example, or Boeing, or you have a lot of software and tech like Amazon, Meta's here, Google is here, Adobe is here, and of course the big one, Microsoft. Going back to appreciation here in Seattle, the historic 100-year is that 5% to 6% is the single family home appreciation year over year. As you can see again with this chart, this is a national chart now. You can see that it constantly goes up except that dip. So what does that mean? Let's say that you're paying $2,000 in rent right now and your landlord decides to raise it just 5%. Now you're paying $2,100 the next year. That's $1,200 more that you just gotta pay out of pocket, and you're building no equity. Now imagine you scraped up 3% and you bought a starter home. It's not your favorite home, it's not your forever home, but it's $500,000. You put a little sweat equity in it, right? If it appreciates just that 5%, that historical single family home in Seattle percent for 1 year, what is 5% of 500,000? That's $25,000. So in 1 year, you can boost your equity by $25,000 as opposed to losing another $1,200. Which would you rather have? I would rather build equity, and personally, that's what I did. It was very stressful to buy my first condo. And I'm a realtor, super stressful. Right after I bought, the market dipped. And guess what? It didn't really matter because I'm living in it. It's not like I bought a stock and then I'm selling the stock at the bottom. No, I'm just gonna continue living there and I'll hopefully sell it when it's built up some legitimate appreciation. But selling it a year after, I probably just shouldn't look at the Zillow estimate or the Redfin estimate or whatever. I should just live and be happy with the fact I'm not paying rent. I paid over $100,000 in rent in my life. Can you believe that? Crazy. And if I do this right, I should have $100,000 in equity within 3 years of owning this condo. Wild. The last chart here is our inventory chart. As you can see, the national inventory is quite low. Builders are not building at a fast enough speed to keep up with today's demand. You might see new construction out in the suburbs, but in a place like Seattle, it's very difficult to build a lot of new construction because we're very limited in terms of our land. We have water bodies, right? And we have mountains and we have different landscapes. So long story short, combine that with the fact that, lumber had crazy prices during the pandemic and steel's going up and down and all sorts of materials with supply chain have had issues over the last couple of years. Building is not exactly firing like crazy as much as people are coming here from California, for example. So long story short, inventory, especially with single family homes, which is what everybody wants here. We have plenty of condos, got plenty of townhomes, but people want single family homes with some yard, especially after the heart of COVID, right? People want to work from home and actually have some space to stretch their arms and their legs, right? So you can see inventory's low, demand is lower because of interest rates. So I'm gonna ask you this, what do you think is gonna happen when we have lower interest rates? Right now, Fannie Mae, one of the two largest aggregates for loans in the United States, is predicting by 2025 interest rates to be around 4.5% to 5%. Significantly lower than today's rate, which is around 8%. So what do you think is gonna happen come spring of 2025? Do you think those buyers are gonna come off the sidelines? I really think they are. So if you can lock in a lower price right now and get the seller to buy down the interest rate and stop paying rent and take advantage of appreciation after the market has already corrected down, most people don't regret buying real estate early and holding it. And it's not that people that are brave, it's not that they don't have fear, it's that they feel the fear and then they still do it anyway. I'm gonna tell you from experience, not just as a realtor, but as a person that is going through this myself. I was a first-time home buyer, and I'm working with a lot of first-time home buyers and investors and long-term holders of real estate. They're all saying the same thing, which is, I'm so glad I'm not paying rent. I'm now able to have a lot of creative solutions for taxes, for cash flow, for living, and flexibility. The last thing I'll say is, there's a lot of self-made millionaires in the United States, right? Not one of them does not have real estate in their portfolio. It's not gonna be dream house from day one. Stepping stone, like I said, maybe start with townhome or condo, and then you trade up. Maybe start with a small house that you can add equity to. If you'd like more information or would like to have a free consultation, feel free to reach out. My contact information is right here. Thank you.